All right, good morning, everyone. It is 8:13 on the morning of January 18th, 2022, and this is my pre-market strategy session. And so today, I didn't notice until just this morning, but there is a gap on the chart that needs to be repaired, and it looks like that's what the chart is doing right now. And this gap is between 282.33 and 286.51. And and there are a couple other things to notice about the chart. My basic strategy right now is I'm setting up for a leg down in a what I think is going to be, we'll look back and we'll see this will be a bear market rally. Yesterday I was expecting a red day, and so I opened some positions yesterday and then closed them on the same day. And so I was looking for a breakdown below, gosh, where was it? I think it was the previous days. I took the line down. I've forgotten where it was. It was somewhere. So just let me pull this chart down. Here we go. So basically, I went to short the breakdown below the open. So yeah, that's what I did. So it opened right here, and I was anticipating a bearish day yesterday, and so when it broke down, I got into a position right here. Then it drifted up and just kind of stayed sideways, and so I closed the position before the close yesterday for a small loss. And when I gave it until the end of the day, and the break in the market just wasn't happening, right? So we wound up with another green day yesterday, to my surprise. However, I think that it's just going to be a matter of time until we fill this gap right here. And I mean, it could possibly happen today. And then we start to turn back down for a leg down. And I like to trade in congruency with the trend. So you can see here on the daily, this is the overall trend right here. It's bearish. Again, I do think that we're going to see a bear market rally here. It's just that nothing goes up in a straight line, and the moves to the downside in a bear market rally tend to be, in the bear markets, I mean, they tend to be bigger on any single day basis than the moves to the upside. So all I'm doing here is I'm expecting the chart to look something like this here over the next, say, 2 to 3 weeks, as we'll get this gap filled. Maybe it'll bobble around here for a couple days, come back down, find some support here, and then make a move up. And to break above this channel right here would really put the market in rally mode. Although I think it's short term, I think that it's just a matter of time until we see new lower lows on the Qs. It's just I don't, for the time being, until January, February, and March play out. I want to be bullish. I will play to the downside in a bear market and expect to see some swift returns. That's what I'm attempting to set up for now. However, after this thing finds support again and starts breaking through, I think that we're going to have a pretty nice little bear market rally. It could even sustain itself for the next 5 to 11 months, and then look for the next big leg down somewhere in that time frame, 5 to 11 months. All right, and so something else to notice right here is that we are again kind of in this support and resistance zone right here. This price area, we've explored prices to the downside a little bit, and then we've explored prices to the upside a little bit, now to the downside again, and so we could be in a range here, in this general range. We could be in this range, for probably another 2 to 3 weeks. I do expect to see all of this price action resolve itself either to the upside or the downside. Of course, my personal opinion is that we see things break to the upside between now and whenever the 10-year, 2-year yield curve decides to normalize again. The market right now has a bit of wind to its back with the dollar giving up so much ground. A weaker dollar is better for the stock market performance. That is something that I think it's a little bit inverse from what the Federal Reserve is doing. The Federal Reserve is tightening, and usually when the Federal Reserve is tightening, the dollar is strengthening. So a little bit strange, a little bit odd, but this down in the dollar is helping gold, as you can see. And there ought to be some wind at the back, at the equity market's back for the short term. And again, I think this is just going to be a setup for the next 5-11 months until we get the next big leg down in this bear market that's not over yet, and we make new lower lows on the Qs. I think that's in the cards, no doubt. With just looking at things historically. So in the very short term, meaning the next 2 weeks, I will be looking for bearish setups. And the first thing I think I'm going to just kind of sit tight and watch is to see that this gap gets filled right here. And then after this gap gets filled, I'll look to go short for the sort of leg down, for the zigzag leg down portion, just to set up for a long trade once it gets support and we see another higher low on the Qs short term. And then, of course, all that, again, is just going to play into what I think is going to be somewhat of a sucker's rally for the next big move down at some point. So that's pretty much the strategy for the day. So if we get another bullish day, I'd be kind of surprised actually to see it hit off of 282. No, I'm sorry, 286 to make it all the way back to that gap right now. I'd expect to see it hit and this is the bottom of the gap, and here's the top of the gap. And this gap was put in. The gap was put in between the 14th of December and the 15th of December right here. And I didn't notice that little gap there that happened. I guess I just missed it. But yeah, there is a technical there to repair. If we come down, if this does turn into the kind of the top of this move, I'd expect to see support down here in the 273 area for then the leg up to fill that gap afterward. So yeah, I'm bearish, and I'll probably just use the relative strength index strategy they like to use on the 1 minute and the 10 minute. So we're close to overbought in the pre-market, and we are coming out of oversold on the VIX on the 10 minute. So when all these things kind of don't match up, that tends to be bearish. I'm sorry, it tends to be bullish. So I don't know. I'm just going to sit tight and look for my signals, and I'll know whether I am trading contrarian or congruently to my bias. And if you can, recognize your bias and then know when you're wrong right away, you can cut your losses faster. So my bias is bearish, short term. So today, I'll know I'm wrong if suppose for a moment it sells off, we get a break up above, and then it retests and then continues higher. I'll know I'm wrong at that point right there if I get into another bearish trade today. I'll look for a bearish trade If we break up above, retest, and then go lower, then I'll definitely be looking for a bearish trade. So, and if all that lines up with my relative strength index strategy, then that's what I'll do. Interesting moves here on Bitcoin. Let's take a look at crypto here real quick. I don't trade crypto at all. I don't trade the Bito. None whatsoever. It's just that this Bitcoin is as far out as you can get on the risk curve. I mean, you know what I'm saying? Like, as far as assets go that are, the most risk oriented, it's I'd say it's cryptocurrencies, and this run up could be it's kind of a short term signal for what we'll see in other markets. Now, this also could be Tucker Carlson did a little thing on how this Bitcoin run up could be due to some I guess extortion happening. There's airlines that, the U.S., China, and European airlines or Canadian airlines or something all got hit the same way. There was a few days ago where the FAA shut down all flights, grounded all flights, and the conspiracy, or the word is that the hackers that downloaded some kind of malware into the FAA's NOTAM system, which is a notification to airmen, held the FAA hostage and demanded payment in Bitcoin. That's the rumor goes that it happened to Canada and China too, or something like that. And so that's been this recent run up in Bitcoin because the transfers in Bitcoin are pretty much untraceable, really. The addresses and so forth, transactions. So I don't know, but yeah. So just kind of sitting tight and just playing the chart that's in front of me today. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you at tomorrow morning's strategy session. Thanks for tuning in. I am out.